Hello guys, welcome to my channel. Hope you're doing well. So many of us find it difficult at times to file capital gains or mutual fund in ITR2. This video is to address those issues and to generalize the idea on how to file capital gains from mutual fund in ITR2. All right. So let's have a sneak peek on what you have in today's video. All right. So let's get started. So the one of the prerequisites to file ITR2 in our case, which is in scope of this video, is in to have this capital gain statement ready. Okay, so once you have it handy, let's quickly go to the capital gain part. I assume that you have come to the same section as it's being shown in the screen. So this is the schedule of capital gains. Okay, so the first thing is, so once you are inside the capital gains schedule section, you have to choose under which section you are under, right? That means among these, in our case, we are considering mutual fund as our source of capital gains or loss, right? So in that case, in case if it is a long term or short term, only these two sections are applicable: equity share in company or unit, equity oriented fund, or unit of business trust on which STT is paid, and under 112A, and from sale of assets other than all our listed items. Okay, so these two are applicable. Right. Now let's go to the next page. So here we need to enter all the necessary values which is part of our short-term or long-term gain, right? So the first font I will explore is how to file the short-term capital gain taxes, right? So here you need to come to this section. Okay, so now you have to open your capital gain statement. Usually that you can get it either from CAMS or Curvy or Franklin. It depends like where you are invested in, right? So for the demonstration purpose, I have randomly, opened one capital gain statement which is downloaded from CAPS. Okay, so let me go to there. Okay, so this is one of the sample capital gain or loss statement which is divided in scheme level. Okay, now let me draw it. Now, if you see, this is the short term section. Okay, in the capital gains, you will see there is short term, long term, which is with indexation, without indexation. So, our focus this time on the short term, right? So, if you see only these two schemes has short term gain. One is the Kotak Money Market, and second is DSP Liquidity Fund. So, as in our case, here you need to give a total figure, how much you have invested, how much you have gained, and the difference will automatically be calculated, right? So, you have to gather information like that. So, you have to find out what is the total cost of investment and total cost and the amount that finally it became when you try to redeem. Okay, so in our case we'll be concentrating on this, 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 and this. And for the sake of simplicity, I have extracted the same information in here, this excel. So if you see, this is the sold value, Kotak Money Market 500, and the purchase is 478. Similarly, for DSP liquid, the sold amount was 41,234 and the purchase value was 39,595. Similarly, what is quoted right here? Now, this is how I got the total figure of sold value and same as the purchase value. So now let's come back to here in our ITL form. I'm just editing one second. See, uh, the first point is full value of consideration. That means what is the amount, what is the value um, during your, like when you are selling those units, what is the total value, right? So this is the sold value 41,734. I have duly quoted here. So similarly, you have to fill what is the cost of acquisition, how much you have invested during the purchase. So total is 40073. 40073. So automatically this is calculated as 1661 as a capital gain, which is, which you earned in this financial year, right? So this is how we need to record it in ITR2 for short-term capital gains. So it will automatically appear here. So now let's talk about long-term capital gains. So if you remember in my previous uh, selection, we have checked basically this particular section where equity share in a company or unit of equity oriented fund or unit of a business trust on which estate is paid under section 112A. So that is why you have to mandatorily fill this section here first, right? So first you have to go to view schedule 112A. Okay, so now don't consider these two entries. I have just added few minutes ago, but I will take you through how to add this and what are all this. Okay? So before we go deep into this, if you recollect in the video description section, I have mentioned duly that there will be two sections we'll be exploring under long-term capital gains, that is grandfather value and without grandfather value. Okay, so let's have a brief understanding what are all these, then things will be easy for us to make an entry here. Okay, so let me go to capital gain tax once again, this statement once again, sorry. So in this statement, if you see, the scheme level segregation is there. Let me draw it. Okay, so there is a specific section grandfather value, right? So this means what? If you have purchased any unit before so and so date, 31st of Jan 2018, and you have sold those units in the last financial year, which is being considered, then those transactions of those schemes will come under grandfathered value. So as I can see, I have long-term gain on three schemes: this one, and this one. That means DSP tax saver, IDFC tax advantage, and SBI blue chip. Now, among these three, two schemes has grandfathered value. This one and this one. That means DSP tax saver and IDFC tax advantage. That means what? There will be definitely some units which I have purchased in 31st of Jan, I mean before 31st of Jan, and I have sold those units sometime during the last financial year, right? After this is clear. Okay, now as for the rules, let's consider the grandfather value. uh, okay, now we'll come to the non-grandfathered value, like this one. Okay, so in the grandfather value, as per rules, you have to see what are all the transactions you have made for redemption. Okay, so for the sake of simplicity, there are two examples here for the grandfather value, IDFC and DSP, but we'll be exploring only the DSP taxable fund. Similarly, you have to follow the IDFC tax advantage fund, right? So let me go to the transaction level of DSP tax saver fund. Okay. Okay. So here you see there are two redemption been made, right? One is on 4th of Jan and one is 5th of Feb. And the respective purchase has happened before 31st Jan 2018, all of them. That is why it has come under grandfather investment section, right? Now let's come to here in our ITR2 form. So in your case it will be blank, and so you have to click on add another. Since I have already added it, I'm just going to the edit button. Okay, so we'll be adding the first entry in our of a particular scheme where I have grandfather investment, right? In our case it is DSP taxable, right? Okay, now the important point to note here, you have to make those many entries in here which is you know uh, matching with the number of redemptions. Let me explain one second. So you have made two redemptions here. One is this, one is this. Okay, so that means you have to make two entries. Okay, now I'll be making an entry of this one, the first one, right? So first one, let's go to here. Okay, I have clicked on the edit section. Let me come back here once again. Okay, this is the first one. Okay, now if you see, the first redemption was made on 4th of Jan, and these are the units 155.726. Okay, now 155.726. Okay, so before I do that, I think I need to mention this thing also. Okay, so on or before 31st of Jan, which since it is a grandfathered investment, so you have to mention that mandatorily. And since it is since it is purchased, those units are purchased before 31st Jan 2018. So we have to mandatorily quote the ISIN code and the respective name of the fund, right? So it is DSP taxable fund. Okay. Now, from this capital gain or loss statement, you can find out what is the number of units for that date which you redeemed, that is 155,726. I have quoted it here. Okay, number of shares slash units. Now what is the price of those units? That means what is the NAV value of those units during the day of redemption? That is this 64216. 6421. I have just made only two decimals, so that's why. Okay, now you have to get the cost of acquisition. Cost of acquisition means while you made the purchase, what is the total amount you have spent, right? So cost of purchase, definitely you can calculate from here, like this is the purchase units, and this is the cost of it. So just multiply these two, make an entry here, multiply this one and this one 46.162 and make an entry here. Okay, so for the sake of simplicity, I have done the similar calculation and I have drafted here. Okay, so these are the units 43014, 43014, and the unit cost is 46496. 46496. Second is 21663, 21663, and 46162 is the unit price. 46162 is the unit price. So similarly for the other two also I have duly quoted. So these are the units, these are the price, I mean the purchase cost, and this is the total, I mean this is the NAV value. Okay, and this is the purchase cost. So total cost is coming of 7322. And let me repeat once again, 7322 is the purchase cost for this redemption only, not this one. Okay, so I'm quoting it 7322. Okay, fair market value per share per unit as on 31st of Jan 2018. That means on 31st of Jan 2018, what is the NAV of that particular scheme? Okay, so that we can easily get it from here. Okay. As you can see, the grandfather value, these are the 50.1160, and definitely that will be same across. Okay, so 50.1160, 50.11. I have made two decimals, so that's why. Okay, so this is how we should fill for one redemption. Okay, so if there are two schemes and each scheme has two redemption each, then you have to make four entries. Like this one is one entry, you have to make four. So as per our example, for this scheme, I have two entries, two redemptions. So I have to make two entries. One entry is here. Similarly, I have to make another entry. Okay. Then this scheme is complete. So we have another scheme where also we have grandfather value, IDFC tax advantage. And here I see there are three transactions. So you have to make three entries for this. So here, like we have for this DSP tax server, you have made two entries. So similarly for IDFC, you have to make three entries. Okay. This is how we can fill those long-term capital gains, sorry. So where grandfather value is present. Now I'm coming to the other section where grandfather value is not present. That means all the units that you purchase, that is after this date, and you have sold sometimes during the last financial year. So as per this example, we have SBI Blue Chip Fund. Okay. Now let me fill the details for this one. One important point to quote right here is, if you have multiple such funds where I do not have any grandfathered value, those can be clubbed together and we can make only one entry. That is acceptable. No problem for it. Okay. Okay. So as per our example, I have added this. I'm just exploring the edit button once again. So after 31st Jan 2018, definitely it is right. So for this case, these options will be disabled automatically. You don't need to fill it. So cost of acquisition, so that we can easily get it from here itself. Since I have only one scheme, if you have multiple scheme, you just need to sum it up, right? So cost of acquisition is nothing but the investment cost, that is 46591, 46591, and the full value of consideration, that means the amount of which you were the selling price basically. So 49329, 49329. Okay, and this expenditure is usually zero, so we put it as a zero. Okay, so that is how we can fill it, the long-term capital gains uh, which doesn't have any grandfathered entry. Okay, like this. Now click on confirm. Come back to capital gains section. Okay, so both the figures, long term and short term, is now properly filled up and it is showing fine. Okay, since we have completed LTCG and STCG section, at least making those entries, we have another section, small section, which also we need to fill it up. Okay, according to the values that is coming up in LTCG and STCG section, right? Now you have to go down a little bit. You will see the point number E, set of current year capital losses with current year capital gains. So here you will see the exact value it has taken, okay, based on the above two entries. In our case, the long-term capital gain is 4933. Go down, see, long-term capital gain is 4934. It has taken the exact value after rounding up, and it is coming under 10%, right? Because this is what the rule is, right? It will be 10% of your uh, the gain that will make in LTCG. Similarly, in STCG, this amount will be taxed based on your current slab, right? So let's see. Yes, it is 1661 and it is based on the applicable rate, right? So these informations are captured correctly. Now, what you need to fill right here is information about those gains that you need to tell the department how did you get it, like how did you earn this particular amount, this and this across the year against each quarter you can think of. Okay, so now in our case the short term gains is as per the applicable rate. So this row number 3 is applicable for us, and here you need to quote this one 4933. How did you earn across this year, in which quarter, how much you have earned, right? So for that you can take help of there is one more section in our capital gain statement, that is capital gain and loss overall summary. So here you can easily find this out, and think yeah, it is this one, the first section, short-term capital gains. So here you can see this same the time duration they have kept things segregated, so you can take the value right from here. Okay, so from 1 4 to 15 6, this is the amount you have gained. For the next quarter it is kind of 0. Okay, for the next one it is 470, like that you have to fill it up. Okay, so total you have to make it 1660. Okay, but in our case it is sorry, this one 1661. Okay, fine. So I'm just randomly filling it up. 1661 short-term capital gains applicable rate. Let's say 1660, and next one is 1. Okay, and for long term 4934, right? And that will be 10%. 4930, and let's say 4. Okay, but don't just put it like this. You have to fill as per the capital gain statement, right? So for the long term you have to come to without indexation statement, I mean this section, and you have to take the value from here, the very last one, last row. Okay, so like for 1 4 to 15 6 you have to put 0, 16 9 to 15 12 you have to put this one. So like this totally you have to make it 12,812 as per this example. Okay, so this is how you need to fill it up. Okay, I just match those values, so I didn't follow this capital gain statement, but in reality you have to match those values as it is being shown in your capital gain statement, right? You have to click on add, you have to click on confirm. That's all guys for this capital gain segment, and hope you have found this video useful. So please do comment, subscribe, share and like, and I'll see you in next video. Till then, bye bye.